Let's talk about Slack for a moment, Olivia. Slack had more than 10 million daily active users, according to the filing at the end of January. Only 88,000 of them are paying. How does Slack intend to become profitable?
Right, that's right. This morning, Slack dropped its S1, giving us insight into all the financials that they've been hiding for many, many years. A great time to, this is really our first time to see below the hood here. I think what's remarkable about this S1 is really that their revenue doubled in the last year. We're looking at $400 million in revenue with a net loss of about $140 million. The year prior, it was about $220 million of revenue. So they're definitely, to answer your question, they are definitely on the path to profitability if they're growing at that rate, just doubling their revenue year over year and then keeping their expenses exactly the same.
Olivia, how much did people buy into Slack in the recent rounds when it was a private company? Kind of what pickup are we seeing here as it transitions to the public sector?
Yeah, so their valuation has grown from $7 billion in August to about 15.6 we're calculating now, currently, because the shares most recently traded at about $26 a share. So again, a lot of demand and interest in this company. One thing I really want to point out to you is that this is a direct listing, not an initial public offering, which makes it slightly different in that they don't rely on underwriters and banks to bring the stock to the public markets. They simply list a share price on listing day, and they allow a pure exchange of the shares on that day. So it's really important that they get a sense of demand leading up to the initial public offering, and they do that by opening the market for secondary shares, allowing their early employees and some investors to sell secondary to gauge the market for price. And what they're seeing is that there's demand and interest around $23 a share, $26 a share at the highest. So I think that's what we should expect to see Slack go out at on listing day in about 30 days.
Right, so it's such an interesting way to do things, and sources have been telling Bloomberg that Slack says it's because it doesn't need the cash or the publicity. Is that true? If it doesn't need the cash, then why even list?
Yeah, exactly. I mean, I think, there are a couple reasons to go public. You want the publicity, you want to have a publicly traded company because it's easier then to purchase other companies so that you have a stock price that you can ping your value to. You obviously want, and you also want to create liquidity for your shareholders. So a direct listing is this unique way of going public, becoming a public company, but you're not issuing any new stock, and you're creating liquidity for your shareholders, but you're not creating dilution, which comes that's what happens when you create new shares. So I think this made a lot of sense for Slack. They have a lot of money just sitting around. They don't need extra capital. They don't need to sell more shares.
Yeah, it's also easier for those that are in to get out, I guess. Olivia, final quick question
there's no lockup.
on Uber. Yeah, exactly. Let's talk a little bit about Uber. As you say, the Slack path to profitability, reasonably straightforward, less so when it comes to Uber. So let's talk about kind of how this is likely to go. What is your sense of the valuation they're putting on it? Is it punchy? Is it kind of posing a question for the market? Or do you think the market is okay with it?
Certainly, that's a great question. What we found is that they really came out quite conservatively. They had a share price range that they announced this morning from $44 to $50, which is quite conservative compared to what people were talking about several months ago. When that puts them at about an $84 billion valuation, and previously they were talking about $120 billion valuation. So quite conservative there, and I think that's just the market's response to the fact that their growth has slowed, and they're seeing some interest. Investors are sort of questioning Uber Eats growth at the moment. They're seeing that DoorDash is really growing, but still a lot of interest in that business as well.